And welcome. It's time to talk about another important issue for business today. And the focus today is on D2C brands, a sector that's buzzing, an industry that's thriving and growing rapidly. You're with the Economic Times, and my name is Ashutosh. I'm senior editor at the Economic Times. And we're talking at a time when there is further confirmation that the economy is heading for normalcy. So it's an important time to discuss the topic going direct to the consumer, the future of consumer engagement, brought to you by the Economic Times in association with Pickrr. The gross domestic product growth, or the GDP growth for July to September quarter of the current fiscal this week was announced at 8.4%. Now that's an important number. This is the fourth consecutive quarter of positive growth after a two-quarter contraction that was witnessed last year. That is great news for D2C brands, since private consumption, one of the key metrics for the economy watchers, and one of those key metrics that the economy watchers track as well, that is growing. Output for the 8 core sectors rose about 7.5% in October this year, again indicating that the segment that makes up the core of the economy, that's about 40% of the economy, that is growing. And now, specific to the D2C, recent reports said that India has as many as 800 D2C brands. But some numbers put that higher as well. And in the next 5 years, the D2C business in India could be hitting about $100 billion. When you put that number at 100 billion, suddenly you'll see a lot of brands, a lot of investors, they're interested as well. So factors such as growth of e-commerce, widening of the internet user base, changing consumer behavior, innovative fulfillment models, all these have caused, and all these are one of the reasons, one and many of the reasons why this market is expanding. And tech platforms are easy to create today and have created a conducive environment for the new age brands to connect with their customers directly. That's why that D2C, direct to consumer. So as the economy improves and the D2C opportunity presents itself, this is indeed a wonderful time to talk about the future of consumer engagement. And I have a fantastic set of entrepreneurs to talk about the experiences and how they see engagement evolve in the near future. Let me introduce the fantastic set of entrepreneurs. Shankar Prasad, CEO and founder of Plum. He's an IITB alumnus, and Shankar has served as a management consultant at McKinsey and Company for about 2 years, and also at Everstone Capital later, before turning an entrepreneur. Thank you, Shankar, for joining us.
Thanks for having me, Ashu.
Vedang Patel, co-founder and director at The Soul Store. He is responsible for a lot of work there, designing digital promotions, finance, analytics, inventory management, and for the brand. So he is a mechanical engineer from SPCE Mumbai. Vedang, welcome.
Thanks, Ashutosh. Glad to be here.
Okay, Kapil Makhija, CEO at Unicommerce. Kapil, 15 years of experience across technology, e-commerce, supply chain. He's been leading Unicommerce for about 4 years, and he is an alumnus of IIT Delhi and I'm Bangalore. Kapil, thanks so much for joining us.
It's a pleasure to be here. Thanks.
Aarti Gill, her passion has been to make healthier living simpler. And Aarti, has worked in a range of countries, India, US, Singapore, with companies, a variety of companies. She's an alum of IIT Roorkee with an MBA from INSEAD in France. Aarti, thanks so much. Okay, also we have Dhruv Madhok, and he's co-founder at Arata. Arata is an internet-driven, clean-labeled personal care brand, and he's earlier worked and exited 2 ventures before he has worked at various places as well. He has a Bachelor of Sciences degree in Business Administration from University of Southern California in the US. Dhruv, thanks so much for taking out the time.
Thanks, Ashu, for having me. Looking forward
Okay.
to being part of
And we also have Gaurav Mangla, CEO and co-founder of Pickrr, undergrad from IIT Guwahati. He co-founded Pickrr in 2015 with his batchmates. And before Pickrr, he's worked with a variety of companies, one of which was acquired by a Delhi-based online talent requirement marketplace in 2015. This company was Optimize Bits. Gaurav, thank you for being with us on the program.
Everyone, glad to be here.
Okay, so let me again warm welcome to everyone on behalf of the Economic Times. So my first question, let me take it to Gaurav there. Every brand is trying to make the consumer experience when they buy their product or service great. But does engaging with the consumer end with him coming online with the market, with making the purchase, give us a big picture view of how it should be different? Gaurav.
Yeah, sure, Ashu. So, Ashu, you rightly touched upon the emergence and growth of D2C brands, and have been very lucky to be part of this growth story. So earlier, what D2C brands, like from where they used to get visibility, was from players like Amazon and all. But eventually, the end customer who used to purchase from Amazon was the customer of Amazon, not of the D2C brands. So now they have started engaging with them, showing them that they have reduced the tag to production. They have now manage the entire end-to-end customer engagement. They directly, turn around things very quickly. And plus, there is a lot of enablement around the corner as well. For a D2C brand, to go to market has, expedited a lot. And plus, there are a lot of services of, tech enablement, conversational AI, fulfillment, reduction of tag, pre-checkout experience, post-checkout experience, and eventually knowing what exactly your customer wants. So have been a part of growth journey of OZiva as well. So one of the panelists from OZiva is also here, and also seeing how D2C brands have grown and known their customer better. So knowing your customer, knowing your market is another thing, and you rightly touched upon that. D2C brands are growing almost 20% of e-commerce GMV now, and expected to be 43% of e-commerce GMV by 2026. So the key drivers of growth of for any D2C brands is ensuring quality of product, ensuring the correct brand name, and engaging with the customers on every touch points, and ensuring that there are repeat purchases, plus a quality referral program and end-to-end transparency and visibility around what they are up to.
Okay, so let me toss the next one to Vedang then. So Vedang, now, because Gaurav mentioned about how Amazon, the experience was essentially that of Amazon. Now D2C brands would like to steer clear of that. So how can D2C brands change and improve that experience? And what could be a different approach to that, Vedang?
So that's a very good question, actually. I think I'll give you a good example of why it's important first. As an apparel company, the pandemic definitely hit us very hard. But still, that was a year in which we grew. I think the only reason we grew is because 90% of our sales are from our own platform. If you can manage to do that, you don't have to be, and since we're using Amazon as a scapegoat for all marketplaces, we're not praying to the gods of Amazon for orders during those pandemic periods. We essentially become masters of our own destiny if you are a D2C brand, right? I think that's one of the reasons why it's important. Now, why is it hard is because Amazon and the likes have done a fantastic job with that being the turnaround time for your shipment, how quickly, how good your customer service is, refunds, etc., etc. So it's almost become the norm. However, I think the ecosystem today is very well stacked. People like Kapil and Gaurav are doing a great job with a plug and play model where you can have your payment gateways, your logistics, warehousing, etc. All of this linked into your D2C brand, and you can give those services that Amazon and the likes are giving. Why is it important for you to build this community? I think there's a consumer shift in the way people are purchasing. They don't want the generic option anymore. Maybe they don't want what the HULs are making, and they want what OZiva is offering, for example. I think that unique requirement that consumers have is why D2Cs now exist. And with this plug and play ability, I think that's where the growth is also going to come from.
Okay, so since you referred to OZiva, let me ask if when the consumer, and I essentially wanted to understand from your point of view, Aarti, when D2C brands put together a product or a solution or a service, does the consumer need to identify, or a bunch of consumers, that community that you want, do they need to come alive seeing themselves as the product or the service?
I think Ashutosh, Vedang rightly said, first of all, that today there's a broader ecosystem, right? There's a plug and play that exists, right? And you really don't have to solve for all problems by yourself, right? Now, in our case, what really happened is, we work in the space of consumer health and well-being, right? Which is really about solving, outcomes of health, or how do we enable people to be far much healthier in general, which is where we realize it's not just about the product, right? It's also about the kind of service that you kind of give to the customer, because you really need to invest in the education of your customer base, right? We came up with a very interesting solution, which is very unique, which is called OZiva Prime as an offering, where today somebody who buys an OZiva product can actually consult an expert, right? They can get, things like diet plan, nutrition consultation, right? Now, I'll tell you why that is very relevant is because one is, you need to understand your consumer, right? Which I think being digital first, it gives you a lot of data points that you can understand whether the person has, say, PCOS, whether a person is suffering through, say, menopause, right? What are the kind of different solutions that kind of that would be relevant for them? At the same time, it's not just really about selling product. I think today, you can have very deep conversations with your consumers, right? You can actually help them, and being digital first actually gives you, the ability to be able to interact with your customers. I think that's the benefit, right? But having said that, one of the earlier things that I was pointing out in our conversation was digital first is it's basically the start of, if you have to build really a very scaled up brand, right? You need to go omni-channel, right? You need to be present across all different touch points where consumers are. But I think the data points that you are getting from the digital interactions can help you come up with better personalized products, come up with the product launch, do product launch which are far much faster, right? And at the same time, going back to my earlier point, have more meaningful, deeper conversations with your consumer base.
Mm-hmm. Okay, get your point. So, Kapil, I'd like you to come in on, all the companies which are trying so much to impact the buying experience for the consumers. But what about that part where the buying ends and the service begins? Because you've done business with the consumer.
Yep.
How do you make him yours for life?
Yeah, I think, and that's a very valid point, that increasingly a lot of brands we're seeing are warming up to the idea that while acquiring a user or a consumer is important, it's equally, if not more important, to retain them. And hence a post-purchase experience becomes important, whether you're shipping the goods on time, Vedang touch upon it, giving an Amazon-like experience on delivery. Are the right products going on? If, let's say for a fashion brand, the SKU mix is so, it can become so complicated to run a warehouse operation. Or are the on-ground staff sending the right product? When somebody orders a red shirt, large shirt, are they actually getting a red large shirt, or they're getting an XL shirt? Mm-hmm. Things like that. So I think what we're seeing, particularly post-pandemic, is brands are ready to invest in technology and making sure that they invest in post-purchase experience, because that way you are able to retain the customer. And ultimately, it's all about unit economics, right? Acquiring a customer is becoming so expensive. You are at the mercy of Googles and Facebooks of the world to be able to get the traffic on your website. But once you've given him a good experience, and some of the brands on the panel have done that and are doing it on a consistent basis, that's when you're able to build a sustainable brand. I think the second thing which Aarti touched upon is the benefit of like selling on website, and Vedang also mentioned that majority of the volumes come on their website. So you have access to the customer data. But I think one of the things that we have seen in solving for post-purchase experiences, brands really struggle with having data at disparate places. You have to figure out whether the delivery happened or what are the RTO rates for different logistics providers. You have to go to different panels to do that. And now they're similarly like looking at which channel, which marketplace is giving them the right sort of volumes, the right shipping rates, the right RTOs, payment, whether they're getting on time, etc. I think that's another area where we are seeing while brands are able to get an initial traction, but in that 1 to 10 journey, they start to struggle because the data is very disparate. And I think that's again a trend that we're seeing particularly in this year is where brands are also wanting to get everything at one place so that it becomes meaningful, because consumer at the end of the day is omni-channel, as Aarti mentioned, right? You have to be present at all channels, marketplaces, website, offline stores. Also, as a brand, should be able to view customer holistically, and that's why having data at one place becomes important, which will enable them to offer a superior post-purchase experience, leading to stickiness, leading to better unit economics. I think those are all related chains, and we are seeing brands now evolving in their journey. Some of the larger ones are actually ahead, and that's where the ones that are starting out their journey should be investing and maybe learn from some of the mistakes that the earlier brands did to maybe do this right from the beginning, so that the chain kind of gets set from the beginning itself.
Okay, so you almost like preempted my next question, because that's what I thought I was going to ask Dhruv. Dhruv, as part of solving the post-purchase issue, how do you make sure that the data is uniform? And for smaller companies, when they begin, how should they go about making sure? Because ultimately, this is oxygen for a small company's growth.
Right. So I think keeping the customer updated with constant updates on where their order is step one. Retaining the customer and keeping them engaged over email and building a community is step two. Essentially, just constantly engaging with the customer using a variety of touch points, whether it's SMS, email, push notification. Staying close to the customer, understanding their problems, communicating with them over Instagram, because there's so many channels. So I think constantly engaging with and being proactive and maybe even over communicating with the customer, I think is step one. Second is there's lots of ways to automate and get feedback and understand how the customer experience is. We could send follow-on WhatsApps, follow-on emails, follow-on SMSs to gather that data and basically get kind of like a net promoter score, because it actually makes a lot of sense to invest in the technology and the operations of understanding how the post-purchase experience has been, because it's ultimately all about the LTV, and retaining the customer over a long period of time. As my peers have said, acquiring customers on marketplaces is great. It's a great way to hack growth, but ultimately the long-term growth can only come if you consistently engage with your customers and understand their likes and dislikes. So when customers actually write in with problems and complaints, I actually feel very, very happy, because then we can convert those into actionables. I'm more concerned about the customers that actually don't write in and just completely dismiss us and write us off. And I believe that customer service can become a huge selling point, because I think the overarching theme, at least in the Indian context, is that customer service sucks. So if you have a really good customer service experience, that becomes a wonderful talking point. So in summary, essentially just over communicating with the customer across channels, asking for feedback, and constantly staying in touch and communicating with them, thanks to technology, it's possible now, would essentially be one of the best ways to kind of improve the post-purchase experience.
Yeah, so we were just talking a little while ago about Amazon, and look at how they've gone about with the Earth's most customer-centric company, and look at how they've tried to go about reaching that goal of sorts. Okay, just a reminder for all the viewers.
Absolutely.
You can post your questions to the experts here. I'm sure you'd like to ask your questions to the founders, to the entrepreneurs who run D2C brands. So please feel free to post your questions in the Q&A tab, and we'll try and take some of those questions to all the experts on the panel, and you can have them answered as well. So there are questions coming, but we'll try and bunch them together in just a little while. So please keep them coming. Okay, my next question to Shankar. Shankar, D2C brands have been amazing at acquiring customers, and and they've found newer ways of acquiring customers. Some of them face a challenge of retention as well, and it's a normal business for that to happen. What can a young, an upcoming brand, what are some of these innovative ways you'd suggest or you'd think that can work to make their customers stickier? I know it's a broad question, but probably some tricks of the trade.
Sure. Not only is it a broad question, I think as Kapil mentioned, is perhaps the most important question to answer, because when you start out, all you're focused on is acquisition, but very quickly you'll realize that unless and until you work on retention, it's a slippery slope which you can't climb back up on. So I think this is perhaps the most important question to answer for any D2C entrepreneur. And again, I'll caveat by saying that I don't have all the answers. If I did, I would perhaps be running a business which is maybe 10x the size that we are currently. But jokes aside, it's an evolving space. It's a constantly, let's say, moving target in a way. But I think just to sort of answer the question in specific terms, first and foremost is use of data. And I think today there are tools available which were not available, let's say 3-5 years ago, which, everything is available as a service now. You want segmentation as a service, it's available. You want mailing as a service, it's available. You want sort of data, sort of distilling things out of data that, insight gathering as a service, that's available. So there are many platforms available, software available, plugins available that you can use to quickly sort through data, which you will otherwise not be able to do it on an Excel sheet. So that I think is the first, hack that I would suggest. The challenge there is to make sure one is going with tools that serve one's purpose instead of just the first one that one comes across. We have made that mistake of, getting onto a tool that didn't work, and then shifting becomes a problem because you shift all your data again out. First thing. Second thing is empower your customer support team. So very often we sometimes think of customer support as a sort of hygiene function that is there, which is just, it's a nice to have function, but it's almost a cliche to say that make that the center of what you do. For example, what we still do, despite having sort of scaled our D2C to a sort of meaningful number, is to a large number, is to have weekly catch-ups with the customer support team. I myself am on those calls. And any problem, even if it's a torn box that reaching the customer, that gets escalated. And if it's a problem that's recurring, that definitely gets solved like very, very quickly. Right? Whether it's a delivery related issue, it's a packaging related issue, it's a product related issue. I think it's very important for that feedback to float up and get acted on immediately, qualitative as well as quantitative feedback. Those two would be, I would say, the bare bones basics of where one starts. Running a fully staffed, adequately trained, motivated CRM team, again, easier said than done. I think all the entrepreneurs on this call will agree. It's easier said than done, but running a full-fledged CRM team is worth the investment. I think the earlier you invest in that capability in-house, the better.
Okay, so that's a very critical point. Invest early in the CRM teams there, or in the CRM capabilities, so that retention could see a smarter uptick. Gaurav, companies, okay, so we've spoken about acquisition, we've spoken about retention. Also, to make sure what you produce, how can that inventory be managed smarter for companies?
Yeah, Ashutosh. So Ashutosh, that is the, a kind of brand that, any D2C brand should, look forward to, that what exactly they want to sell, what can be the diversification opportunities going forward. And, rightly, like mentioned by Shankar, customer service is one thing that, you should be, like, they should also be educated about what you are selling. Setting the expectation of your customer right is one thing that, enables the growth in D2C segment. in both pre-checkout, post-checkout. And the two main things why D2C is emerging, I would say, would be the kind of customizations that have been brought in earlier. Before, like 3-5 years before, like there was not so much customization on it. Another part is the kind of shift, the quick shifts that brands are able to adopt. If this category, if they are in health and wellness and they come up with a product, if that product doesn't fly, they are able to pivot it to a certain different kind of products. And I'm not only pivoting the product, the capabilities to serve, pivoting in their capabilities also, and moving fast in those areas have enabled a lot of brands to switch the categories, to enable more and more customization in those categories, and plus build a complete 8 to 12 months roadmap on what kind of products you'll be selling, and selecting a niche. It's not like you have to sell everything. It's like you nail one proper niche segment of your D2C market, and then move ahead of what exactly is the kind of customer demand coming up for you to pivot into other categories. And like we heard from the horse's mouth only, like for all the D2C brands, like their acquisition strategies, and now when all you mentioned 800 odd brands are in the matured stage, for them retention is the next key metric to look forward to, and customer service will be a right part. And also one thing I would like to add there as well is setting the right expectation, which Amazon sets. What Amazon does differently, it's a customer obsessed company that we all know. Taj Hotel is also customer obsessed function that we know, and we have seen in their 2611 story as well. But the other thing is they set the expectation of their end customer right. The customer knows that what is the kind of expected delivery that I have, and they deliver it in that. So promising not only in delivery but also in the brand image, the quality of product, managing returns, refunds, and also the need of the customers. Sometimes customer wants to know that what kind of other products you can give me in these kind of categories, and where should I buy them. And enable setting up right expectations there also helps out a lot. And great to see that everybody focusing on NPS. So NPS is one thing that Bain has taught, that it's a complete forward looking metric, and it not only evolves your service, it also evolves your vision for your business.
So Dhruv, also want to understand then this whole obsession. So because this mention of Amazon is coming again and again, how does a brand, a young brand, try and become as obsessed about customer service, post-purchase kind of experiences of customers? What does one do to make your brand like that?
So again, it's about staying close to your customer. Whether it's post-purchase or pre-purchase. Understanding the customer persona, conducting surveys to understand more about them, their likes, dislikes. In personal care, there's a plethora of brands out there. So we constantly ask customers that, if you buy Arata products, why do you buy Arata products? And that might be very different from what we originally thought, as the early hypothesis. And when we understand what the consumer wants is what you call essentially like a language market fit, which is like one level above a product market fit, right? So when we're learning and we're getting these nuggets of information from the customer, if we're using those, those learnings to, of course, manifest itself into the product, manifest itself into shipping. For example, we discussed, broken, bottles or torn packages. Those are some things that need to be fixed, practically. And on the other hand, whether it's developing a product or using the right language that resonates with the customer, I think all of these aspects essentially all emanate to one thing, and that's communication. And I think we're fortunate that as a direct to consumer brand, we have access to the customers and we can communicate with them much, very different from how it was for our peers, say 10 years ago, 15 years ago, when they couldn't have a communication with their customers. They could acquire a customer, by doing some activation in an offline store, and if that customer never came back, you'd never know why she or he never came back. But today you can actually look at your consumer data and actually write back to customers who've lapsed and say that, what was it that we can do better? Is it something in the product? Is it something in the user interface? Is it something in the shipping? Is it something in the post shipping? And thereabout, and of course, setting expectations also, which Gaurav mentioned is very, very important. So I think it's really all encompassing, but ultimately it really distills down to the one thing, which is the communication, at the risk of sounding repetitive.
Aarti, in a category like yours, which is plant-based nutrition products, how do you drill that down, or how do you get that thing out from customers? Because some of those customers may also be having it for the first time.
Yeah, I think, it varies from category to category. In our case, the category is very education content driven, where you really need to invest into, educating consumers. And, in some of the things, we have to invest in creating those categories because the categories don't exist, right?
Exactly.
So, you predominantly, nutrition is not something that, India is like everybody in India is actually having as an extra dose of nutrition, which is where I think the whole focus is actually to educate consumers, right? And it's a tough task. It's not an easy one, right? Because say, for example, the women's health category that we created, right, as I was telling earlier, from the health drinks. We know for kids, like kids nutrition is pretty much famous, right? But adult nutrition, between that age group of say 20 to 40, when we started the brand, we realized it's not something that everybody consumes. You consume after 45-50 plus, जब डॉक्टर ने बोल दिया कि अब तो आपको ये diseases हो गया, ये हो गया, या आप बच्चों के लिए लेते हो. I think in between that entire thing, people were not having the products, the kind of products that we had, right? Which is where it meant keep educating the consumers, right? And that can happen through different channels, right? And as I was telling earlier as well, for us, digital happened because we were honestly rejected by a lot of other channels, right? We tried placing our products in the offline mode, and pharmacies ne bola, pharma companies are very big, right? If you go against the distribution, they build it over decades, right? So hence, I think that didn't work out, which is what was working out was predominantly how, let's speak directly to the consumers, and digital was the way. And I think one of the important things, by the way, that has happened in India in the last 4 or 5 years is Geo. Because I think Geo changed the way India kind of consumes internet. A lot more people came on the internet, 2G, 3G, though videos dekh sakte hain aap log, right? So it was an important lever in the growth of the digital first brands. And I think that was something that we also kind of started investing in more actually. Yeah.
So, you just remind me of, people, I can almost imagine people being asked, aapko halwa puri khana hai ya nutritional products, and I can almost imagine people opting for the first one. So,
yeah.
But
it's the beauty of this space is, right, how today, I think the last 4 years, the country has seen how, businesses in the beauty space, whether it's, great brands like Plum or Mama or say Nykaa, we've all seen the success story there, right? I think it's a phenomenal thing that has happened where digital first brands have created massive companies in this space. I personally believe, and I'm a big believer, and I would like India to move in that direction, where the next 20 years are for health, right? And I think that it's a journey where we predominantly are today early in those days, right? Where we are actually kind of pushing people or actually educating people to be thinking more seriously about their health. But I think it is only going to get better from where it is today.
Okay, prevention is better than cure, as the old one goes, and we can learn from that wisdom. Kapil, since when I hear someone like Aarti or, even Dhruv talk about some of the passion with which they speak, many of those aspirational brands from tier 3, tier 4, tier 5 towns, or even smaller ones, they would like to sell beyond their local markets. What are some of those preparatory steps that they need to make sure they take it right so that they can grow with the market?
Sure. Before I answer that, Ashutosh, I just wanted to add one point about that today, as Aarti rightly mentioned, that the consumers have definitely post-Geo have become a lot more aspirational, more internet savvy. So having the right customer experience is no longer an option. I think all brands have to invest. Some of the things that we are aware of, like today, if even for a discretionary category like fashion, if a delivery happens late by a day, your chances of RTO increases by 3 times, which hits your bottom line. So you have to invest in customer service. And why I'm mentioning this is because we are seeing this kind of maturity or awareness even in brands coming in from tier 2, tier 3. And there have been a lot of inspiring stories that we have heard about, we've obviously seen in post-pandemic demand from tier 2, tier 3 towns increasing manifold, consistently 100% plus. We first thought it was a short-term phenomenon, pent-up demand post-pandemic, but the last 18 months consistently, I think we've seen that trend both in tier 2, tier 3 towns. The relative share of tier 2 and tier 3 has moved from 32% to now 46% in this just the last 18 months. And that's why even the larger marketplaces, even Amazon, Flipkarts of the world are also investing in those domains. And since the demand shifted there, we have seen a lot of sellers actually coming from there. Interestingly, for Unicommerce now, a majority of inquiries also come from tier 2, tier 3 towns. So it used to be 1/3 inquiries, let's say pre-pandemic, that is flipped to now 2/3 of inquiries coming from these towns. And some of them have grown like 5 times, 6 times from cities like Hapur or let's say a town in Odisha where they're selling, let's say, artificial jewelry. And they have seen at a reasonable base. There are like say artificial jewelry brand who are doing 2 lakh orders on an annual basis. It's not a small scale by any means, right? For a player in a smaller city, let's say from Odisha coming in. And we are seeing those success stories already happening. And at that base, they're doubling or tripling. While a lot of D2C brands are being talked about in the media, but there are also these success stories that have started happening, which are inspiring in the region. And we are now seeing more and more entrepreneurs coming in from that region and also getting funded, by the way, and also making headlines. So I think that's a very encouraging trend. Because of that, we are also seeing localization of supply-demand matching as well. And post-pandemic, there was this whole trend of hyper-local, omni-channel, etc. I think we're now seeing that play out in the tier 2, tier 3 domains. And this is actually helping overall ecosystem benefit, particularly the marketplaces. Now they can tap into these local sellers, fulfill their demand, and make it much easier for them.
Okay. So Gaurav, that should be music to your ears, because ultimately all these smaller brands from these kinds of cities, they can possibly help grow. And this is the kind of opportunity that exists also for companies like Pickrr or some other logistics companies.
Absolutely, Ashutosh. So this is the thing that we call enablement, and we ourselves has grown our customer base of enterprise customers of 50 to 100 in such stories only. So there is a seller from Udaipur who started with 2 orders a day and now doing 2,000 orders a day. We have seen the entire journey. There's a seller in Srinagar started with 5 to 10 orders a month and now fulfilling close to 6,000 orders a month. Then there are sellers in Northeast also, where we were able to establish pickup points there for them, and then in other tier 3 parts of India as well. So obviously, yes, there are 2 levers of enable this growth. First is where these people lose out. So one of them, there are 2 main levers of cost in for any D2C brand in the start, especially. One is the marketing cost, which is the they'll have to eventually pay anything to Facebook or Google, because these are the ones who are the topping above geo bringing people to online medium. And then these are the engagement platforms where people engage with, especially the e-commerce brands and all. So first cost is that, and second is the logistic cost. So for a brand, logistic cost also plays a huge part, especially in their earlier days. And as with experience, that thing gets into a normalized one. So these were the 2 main levers. Another part of that we solved for them is we helped them grow. We eventually ensured that they can offer an experience what an enterprise D2C brand can offer to their customers, and eventually they were able to succeed in that. And one of the levers that we saw that we brought a lot of such small D2C brands. So I'll give you some numbers around there. So platforms like Unicommerce also. So generally, a seller, once they attain a certain medium level brand image, then they choose platforms like Unicommerce and all. With us, anyone who dreams of selling anything online tomorrow can also join Pickrr and start selling. And if he becomes profitable or a kind of a sustainable business in 2 to 3 months or maybe 6 to 9 months, then he moves to players like Unicommerce and all.
Okay, get the picture. Okay, there are quite a few questions coming in, so I'll keep tossing these questions. Maybe some of you may want to jump in as well. The first one comes from Amrita Vishwanathan, and Amrita writes, with marketplaces like Nykaa having big bang sales with steep discounts, how are brands, and she mentions specific names, how are brands like Arata and Plum able to keep up with their sales within their own website during this period? Shankar, if you can take that, because it mentions specifically you, your brand.
So yeah, I mean, it's one would think that it is a zero-sum game, that if they go up, the website goes down, and this used to be part of our thought process as well, or fear process as well. But I can tell you that thankfully the market is deep enough that one player or a bunch of players running sale does not really have that kind of a material impact. Actually, where it impacts more is not on customer behavior, but in Facebook and Google behavior, because there is when the festive season starts and all these marketplaces start deploying their marketing artillery on or ammunition on these platforms, smaller brands end up seeing higher CPMs and whatnot, and you get crowded out in a way, which is a reality, I think, for all of us. But that's something you got to ride out, and that's where again CRM helps you, because you can ride out this without burning the capital base that you have. The second thing, which is an interesting thing that we've observed, which is slightly counterintuitive, but it's very interesting to think about it, that when you have everyone advertising a sale, people also get into the mood to shop, right? So there's a little bit of market activation that happens when there's overall sort of a, let's say, a shopping wave that gets unleashed in the market. And everybody benefits from consumers being in the mood to buy, rather than them not being in the mood to buy. And therefore, it, as I said, it's in my assessment, it is not a zero-sum game. It's a pretty open field, even on the days of big sales. We don't see any material impact, on our platform. And we've seen this again and again. This fear used to play every time, but I think I have now managed to internally debunk this whole thing as a myth. So
okay.
Yeah.
Dhruv, what would be your comment?
On a high level, I'm actually quite happy if the customer is buying our product, whether it's from our own website or whether it's from Nykaa. So that's one thing that keeps me happy throughout. But I feel like beyond that, we're leveraging the footfall of the marketplaces. So if they're offering deep discounts, as Shankar mentioned, that it's not a zero-sum game. We can acquire customers from there and later cross-pollinate them to our website, and that kind of naturally happens with customers we acquire from our website. They go to marketplaces as well. But apart from price matching and doing matching discounts, we also look for ways to make our website's experience a little bit different. And it doesn't necessarily always have to be in quantitative gratification terms. It can be a simple unboxing experience, which is more elevated than that of any other marketplace. So as opposed to getting a product wrapped in bubble wrap, if you get a nice FSC recycled cardboard box, and you unwrap it, and there's a drawstring pouch which works as a keepsake, and there's an insert card which gives you information and helps you sign up for the newsletter, which will give you valuable content and give you early access to to new product launches. So those are some of the ways that we can use to differentiate and distinguish and get customers back to our own site without worrying about having the customers migrate to to the marketplaces. I think they all both serve different purposes.
Okay. So this one is from Neha Kuller, and Neha writes, how to consolidate customer data post-purchase due to the fact that brands are omni-channel. Vedang, would you like to take this? You are the analytics person around here.
For sure. So it's not always very easy. I think you don't get as much information from the marketplaces as you do, but there are a lot of softwares here that help you integrate data from not just marketplaces, but even from your different marketing channels. So whether you are doing it like when you're advertising on Google or you're advertising from Facebook and there's money being spent everywhere, you don't know what the effect of that is going to be. Also, just in general, because your brand is uplifting because of these marketing spends, people may search for your brand on these marketplaces, and you don't know why sales are coming from Amazon or why there's an uptick from Myntra versus Amazon. My answer to any of these questions which are around data is that this should be around what your business should be built. In fact, the culture at the Soul Store is very data oriented. It is so strong a culture that if the data says that an Iron Man t-shirt should be on blue and I'm saying it should be on black, I don't think I internally have the I'd be very embarrassed to override a data decision in front of my team. That's how strong our culture is. And that should be your guiding force, because I think someone on this panel already mentioned, I think it was Dhruv, where you may have your initial reasons on what your product is going to do, what it should sell for, why it's going to sell, more importantly, why people are buying it, hating it, loving it. And all of those may be wrong. And staying in this bubble is why a lot of founders struggle. It's very important to make sure that you're looking at data, you're hearing what your customers say, let the numbers speak. Don't just make castles in the air for yourself. And the moment you start doing this, I think your decision-making will be very effective in general. Okay.
There's another question. This one's from Karan Kapoor. How do you handle the negotiations? Wow, this one's a tough one. How do you handle negotiations with large marketplaces when you build your own D2C infra? Do you not risk losing business with them in favor of competitors who have not built D2C? Kapil? Would you like to take that? Do you want me to read the question again?
Yeah, I'm not sure I understood the question completely.
Okay, so it says, how do you handle the negotiations with large marketplaces when you build your own D2C infra? Do you not risk losing business with them in favor of competitors who have not built, I believe he also said not built their own D2C infra? This is from Karan Kapoor.
I think it's also a function of the ecosystem maturity, as Shankar rightly mentioned, right? It's not a zero-sum game. I don't think marketplaces view the fact that because let's say Mamaearth is a big D2C brand, they will not list it on the marketplace, or let's say Plum or anyone. I think it's about what consumers are wanting, and marketplaces will be more than happy to have them. I think the brands can obviously comment better on this if the commercial terms vary on whether they get more volumes on their website or not. I don't think that's a thing, because I think ultimately the ecosystem is maturing. The marketplaces are also realizing that ultimately it has to be available on the like the consumers' needs have to be met. In fact, what we are consistently seeing is that website volumes are in fact growing 3 times more than that of the marketplaces across the board, not just for the D2C brand. So I think marketplaces do realize that this is a phenomenon which the consumers want. And as Dhruv rightly mentioned, a lot of D2C brands are using their websites for experience. So it's not like a direct competition. And that's why I don't think even the marketplaces view this as like a threat in terms of a listing or anything. We've seen some of the large D2C brands actually doing very well on marketplaces, and 90% plus of their business actually comes from marketplaces. And vice versa also. I think both vary. But I think the other fellow panelists can maybe throw more light on this, on how their negotiations have been with the marketplaces.
Okay, so I don't think we can get to the negotiation part because that'd be a tricky one. But
no, I think let me add, Ashutosh, to that. I think really there's no conversation. I think those are very large automated platforms, right? So they really don't get into negotiation without on this topic, right? So predominantly, I think what you have to do if you have your own D2C as well as if you're selling on other e-com portals is the price parity is one of the important levers that they check. They don't care about that whether you have your own infra or not. I think what is important is if you're selling, say, on Amazon, Flipkart, Nykaa, and Pamizi, then you predominantly have the same pricing or the similar pricing across the board is a topic of concern for them.
Yeah. Okay, 1 or 2 more questions we'll take, and then we carry on with our conversation because there are quite a few questions. Okay, Dhruv's point has been noted by someone. So Dhruv, someone has said, as Dhruv Madhok sir has mentioned, and I'm reading out from what Viraj Gupta has mentioned. As Dhruv Madhok sir has mentioned, I agree on the point that we are more concerned about the customers who won't give a feedback. My question is how to grab those customers who we are missing. Dhruv, a quick point?
Sure. Very quickly, I think, like I mentioned earlier, we're fortunate to have data. So we have their name, their phone number, their email address. send out an email to all your lapsed customers, the ones who've bought products and have never come back, and try to understand what are the reasons why they never came back. Was it a challenge with the product? Was it a challenge with the shipping timelines? Was it a challenge with the unboxing experience? So essentially just, communicate with the customer. And since we have access to their phone number and email, you can, if they don't respond to emails, I think step one is send them a coupon code. If they don't respond to a coupon code, ask them a more qualitative, question. If they don't respond to that, have your outbound sales team call the customer. If you don't have an outbound sales team, pick up the phone and do it yourself. And call the customer and understand, what was the reason. So I think that's the fundamental difference between direct to consumer and your traditional, offline player.
Okay. And one last question for the moment from the list of questions that have come. Frequency of innovation in D2C brands is very high. Well, that's the nature. You're more agile, the D2C brands. Is there merit in catering to micro segments since volumes may not be sufficient for each new launch? Vedang, would you like to take that? This is from Aarti Suryakumar.
Sure, thank you. I think one of the biggest dividends our country has is the Janta. There's just so many people to sell to. So however micro you get, there are just a lot of people. So I'll give you an example because we do deal with a lot of micro segments. There's a Harry Potter cohort and a superhero cohort, and there may be just Thor fans or Mumbai Indians or Chennai Super Kings, all the different merchandises we sell, right? But any of these numbers are the population of other countries. And that's one of the advantages we have out here. I think even if you just want to sell a pen, or you can make billions in this country. I think so. I don't agree with the micro segment part. I think what online allows you to do is, all these people are scattered across a geography. What online allows you to do is to use a centralized inventory, which we couldn't have. Let me just take the Harry Potter example. Traditionally, if I wanted to sell in Nagaland and in some small town in Tamil Nadu, etc., I'd have to have inventory everywhere, which is why the traditional model never worked for this to sell specialized products. Today, same inventory, say 5,000, 10,000 is available to everyone to purchase. And so it's a win-win for both the customers where it's available to and the business where there's an opportunity to tap into.
So the opportunity is clearly not in question. So even the micro markets, micro segments, there is ample opportunity. So where does the scaling happen? How do the hyperscalers work? Kapil, if I can first request you to give a big picture of how do these brands scale up, and keeping very importantly in mind that some of those, the engagement with the consumer is kept at a scale, at a particular level, and improved as well.
So as Vedang rightly mentioned, I think there is definitely demand. The consumer, we are seeing a fundamental shift in consumer demand. So there is definitely scale. You have to get the basics right. I think that's what India has traditionally been a very brand-starved country, right? There have been, we were painting the consumers with the same brush, I think, and that's why the whole need of the entire D2C brand have come in, where they're identifying micro niches and being able to tailor to that. And we are seeing a lot of investment on the experience side, which Dhruv also touched upon, that a lot of consumers, because they are now much more aware, much more savvy than the previous generations, they are able to, you are able to connect with the brand and with the consumers at an emotional level, and hence drive scale. So I think it is important to get the basics right in terms of your product positioning, pricing, etc., which is standard sort of playbook. The playbook is there. How well each entrepreneur is executing on that is defining this difference in the scale of different brands. There are some who've done exceptionally well and are in the range of let's say $100 million plus revenues already in a very short span of time. And there are still some who are in the $5 to $10 million annual revenue range. The scale definitely exists. There is potential. How well are they investing, let's say, their messaging on the brand, post-purchase experience we've talked about, the messaging that they have maybe given in their ads, is the post-purchase experience living up to that messaging itself? The tenets that they have described in terms of the packaging material that they use, the product let's say the design of the product, the service. If it is for premium, they have to have, let's say, delivery happening in a single day and in a sort of a great packaging and give that experience. Versus if it's a value product, then a similar sort of packaging and messaging. When they call up the customer support, are they hearing the same sort of tenets, values? The CEO is probably saying something else, but the support staff is saying something completely different. Haggling, a premium brand, the support staff is haggling for, let's say, a petty discount. I think those are the disconnect that we've observed where brands are not able to scale up, and those who are able to have a uniform messaging throughout, internally and externally. I think internal consistency is very important, where we've seen sort of playbook kind of falling apart. And some of the things that people have talked about focusing on customer service, customer experience. I think the real challenge comes when your customer service staff is also talking the same language or not. I think that is the real test. If you pick up a team member from your team and like blindly ask them what are the 3 things that we stand for, and if it is consistent with what the CEO is saying, I think the problem is solved right there. I think that is where we see the difference that we've seen amongst us, many a lot successful versus not so successful brands so far.
So the internal change is needed first. The conviction among the people internally needs to come before externally are able to convince the consumer. Okay, Gaurav, when the smallest of brands aim of reaching the biggest of consuming markets, the Delhis, the Mumbais, and they could be located in a small city, how can they dream of achieving that? So if they were listening to you today, what would you tell them?
First of all, there are 2 main things that already brought up by Vedang and all, that you should have a culture of setting the expectations of a team, right, and also setting the culture of data. So they should know that where they are selling, with whom they are competing, and what is the right set of consumers for them. And like as Vedang mentioned, that there is a Janta stuff here, there's a huge cohort for anything. So it's not like you can't sell. It's all right. You need to figure out what you want to sell, what exactly is the expectation you want to sell, what are the 3 values of your brand that you want to establish. Like there was a point on on D2C listing on marketplace and all. For a D2C brand, visibility is the main thing. And like consumers are also very smart today. Everybody, if someone sees a product on Amazon, they searches on Google, and they see on whatever sites these products are available and what are the different types of discounts and information. People don't make quick impulse buying today. So for any small seller, I would recommend that he should visualize what he wants to sell, and he should be firm about what is the kind of brand he or she wants to build. Other than that, they should also explore on the logistics part as well. What will be the challenges if they will be serving from tier 2, tier 3 cities? What is the connectivity problem? Would there be any tag delay if a shipment from Udaipur to Mumbai will be shipped from Udaipur, or from a place like Gujarat or Ahmedabad where there's a flight connectivity? So there are certain other key small nitty-gritties they should be worried about. But the bigger problem for them would be what their brand should be like. It should be a kind of a brand which delivers fast. It's kind of a brand which delivers the best valuable product, or it's a kind of a brand which delivers a kind of a customized set of things like customized apparels or something like that.
Okay, now so to a slightly wider question, and this question is for both Dhruv and Aarti. Maybe Aarti, you can go first. There's a question about startups. So in general, which is often asked and could be true of D2C brands as well, how to balance between growth and sustainability of business. Aarti, if you can go first, and then I'll come to Dhruv.
I think a difficult one and a choice that you have to make at all across during the journey, right? And also it's depending on the it's proportion to the capital that you have, right? Or the risk appetite. And I don't think so there's one answer to this, right? Because it also really depends on the founder's DNA. Okay, because say for example, if a particular founder or business is comfortable with say a 30% growth year on year, right? And that's their choice, right? It's really, they don't have to stick to the 4x 5x growth year on year, right? It's a choice that they have made, right? And there is a business definitely to be created even in that kind of a story, right? Where you're growing consistently, right? You have, profitability is one of the things that you kind of are looking at. But one of the ways I think where we kind of look at is, if you look at the entire P&L, okay, it's important that, say, for example, if you're investing today in certain assets like brand marketing, right? Or say, for example, your fixed cost, because if your revenue increases, that percentage over a period of time will remain, will decrease, right? So you can actually make a choice. And if you know that, okay, today, say, for example, your gross margins are high, on your contribution margin level, say, you're standing at, say, 20-30%, right? It's a good business to be in, right? And if you're going negative on that, then you will actually say, okay, would I actually recover the cost, or my LTV would be able to recover the cost of my first, order, right? Kind of a story. I think, and these are different parameters. Any D2C entrepreneur, any entrepreneur generally looks at the P&L, right? And they try to switch gears, or, from one to another over a period of time. The way if you ask me how we do it, I think the answer is we try and balance, okay? Because when we first raised the business, when OZiva was started, it was started with raising debt. We just raised 20 lakh for the business from SBI and HDFC, which means that we didn't have a lot of capital actually to grow. The only way we could have grown is through internal accruals. That means reinvesting the profit of the first month and the second, and that's the story. I think we grew the business for that profitable way for the first 3 years. Then we said, okay, let's change gears. Let's try and figure out, can we actually do something more? Can we innovate much faster, right? And the last 1.5 years, we have switched gear. But at the same time, I think as founders or as a company, you should know when to switch gear. You should do those calculations very well, right? Sure. And to ensure that, you can create a massive institution or a very scaled up business, right? Those gears can be changed in between, right? Because if you look from a 20 years lens, all that it will become is that you can achieve the same thing in 10 years if you are good with this switching gear strategy.
Sure. So Dhruv, you've had the experience of actually, selling your business to entities. I won't get into that part of detail, but if you can give a sense of what this challenge is when you're running a business, and since your experience in the past counts, sustainability versus the other factor.
No, absolutely. I think we learned very early on that sustainability is actually super important. I think it's also a factor of the business that you're in. It's also the nature of, if you're in a fintech business where you have to get really, really large scale and change consumer behavior over large amounts of time before you become profitable, then that's a totally different, challenge. But if you're in a traditional business, if you're in an FMCG business or any other business, for example, where you can actually build it sustainability, I would highly recommend it, because when you build sustainability, when you build sustainably, you're not dependent on, external capital, whether it's, through debt or BCP as oxygen. You can use it as steroids when the time is right. And also essentially using and essentially being bootstrapped or sustainable from the get-go, it forces you to actually think about what your real niche is. So for a while, we actually couldn't raise money from the market before we started. So we had to figure out niches that we could go after where the cost of acquisition was fairly low, and that those turned out to be good opportunities for us. I think for us, we've essentially we're fortunate in personal care to have healthy gross margins, and why we're able to have healthy gross margins is because we're able to explain our differentiation and value proposition to the customer. So spend the early days, trying to grow sustainably, get to know your customer, find niches. When you find a niche, make differentiated products for that niche. When you make a differentiated product where it's not a red ocean, it's a blue ocean, you're not competing on price, you can command a premium. When you command a premium, you'll have higher gross margins. And when you have essentially, a little bit of money trickling down to the bottom line, that's when you can really raise money and throw fuel to fire. Now, in our case, we didn't wait for us to become fully profitable before we raised external capital to start scaling, because we had the conviction that yes, this is something that can happen. But the recommendation and sincere advice, because I was also stuck in a fundraise last year during the pandemic, and it was a very, very difficult time. If there's an option between growing sustainably and depending on external capital, I'd 100% recommend growing sustainably. Opportunities in capital will keep coming your way if you've got something going.
Yeah, I'm always reminded of of what somebody mentioned to me about no founder. He said, and he was a VC, and he said no founder I've come across who thinks his business is valued enough. They always think it's valued a little more than what they actually got it. So it's like chasing a dream of sorts.
Correct.
Okay, now a little bit about the reality as we are today. Today, as we speak, there is a threat of another wave of, unfortunately, the virus taking a new shape, new name, and all that. How do D2C brands, and because they are more nimble, plan for a potential disruption, God forbid, if it were to happen, given that the threat is there? Vedang, if you can go, and then I'll come to Kapil as well.
I think that the threat isn't as much as for the people sitting on this panel, because most of them are, online based or online order supporting. We've all gone through this twice now. We know exactly what to do. The first time was pretty complicated. I think it was more complicated because you didn't know what's allowed, what's not allowed, what the guidelines are. The second time you assumed it's the same, more or less, and you just went with it. So the third time, if anything, it will be even better. The month of May was actually our highest month, the May 21, that is, although that was in the middle of a lockdown. I think because the economy, consumers still need what they need to buy. And since you can't walk into a store, companies that like the ones that are on this panel will thrive in that scenario because that demand will have to go somewhere. I'm not saying that I'm hoping for a lockdown, please. No, that's not what I'm trying to refer to here. But I feel at the end of the day, we are agile. The cultures of these companies have now grown into knowing that, okay, here's a lockdown. This is the general protocol on what to do. Everyone knows what they're supposed to do, what the rules are, what the regulations would be. And we would just take it from there.
Kapil, how does it show up? Let's say since there's so many brands that run on your platform, how does it show up? Can you give us a sense of that?
Yeah, so I kind of agree with Vedang. I think the first lockdown was pretty chaotic for a lot of brands. I think primarily because they did not know what to do, what not to do, what are the right protocols. The second wave, which was obviously much harsher from a healthcare perspective, but so there were a lot of disruptions during that time. But I think the brands were better prepared to handle, and coming into now, potentially, God forbid, if there is a wave, I think the ecosystem we are seeing is much better prepared. The likes of, let's say, Pickrr and the other players are able to absorb these disruptions much better. I think the first wave kind of pushed the thinking for a lot of brands. They started investing in particularly the retail brands who had heavy dependence on offline business. They started shifting online, which is a big change for them. But now I think their processes are kind of set. We saw a lot of investments on hyper-local and omni-channel building omni-channel capabilities. So I think even if now a disruption were to happen, I feel from an ecosystem perspective, there are players who are supporting the brands, and brands are also mentally prepared. Their organization structures are also, we are seeing a change. So like pre-pandemic, a lot of these FMCG players had e-commerce under the umbrella of modern trade. We are now seeing a separate function being carved out. There's a head of e-commerce who looks at omni-channel capabilities, e-commerce capabilities. I think those changes have already happened, and now it's about making incremental adjustments both internally and externally. So I like what I've seen in the post the second wave. We feel that the brands or the ecosystem overall is much better prepared for taking even further surprises than what we don't anticipate as of now.
Shankar, would you like to add anything more to that? I mean, you think brands like you and several others are well prepared, in your opinion?
Again, I entirely hope this is a hypothetical question. I think all of us, speaking on behalf of all of us here, but God forbid if there's anything like that. I think the bigger challenges are around supply chain. Supply chain has already been disturbed very badly post the second wave, not only in India, but globally. So availability, price, everything is just out of whack right now on many items. So if there is one more round of disruption, either in India or globally, I think the bigger stress is going to be on supply side, not so much on demand or fulfillment or customer facing aspects. An already stressed suboptimal supply chain is going to go through a lot more stress, and supply chains are complex because they are interlinked, and to sort of untangle all of that is going to take longer than we estimate currently. I think that's the only thing to watch out for from my end.
Okay. So we have more questions coming in. So I'll just take some more questions in just a bit. But one thing that I thought was important, and this is about what D2C brands, some brands definitely, they bring about. So how does, and I'd like to take the example of OZiva, and Aarti, maybe you can answer that question first, and I can ask others as well. How does a D2C brand create a unique brand identity and brand loyalty among customers? And I refer to the concept or the way it can help build culture, and the kind of products that OZiva makes, not really part of everyday growing up, as you referred to. So that bring about that culture, so that the brand can become, or the brands can become synonymous with some kind of culture. Aarti, how do you build that? How would some brands look to build that?
I think it would hold true for honestly all brands out there, right? Whether being a D2C or whether being a very traditional brand as well. I think predominantly is important question is, what does the brand stand for, right? Which is where we keep talking about the values that you abide by, right? And in most of the cases where we have seen is in D2C brands, where the values of the founder actually get translated in the values of the business, right? Important is first to define that, like, what are the values of the brand? What are you trying to solve for consumers, right? In general, another lever is, and how are you solving it in a very different way, right? Say, for example, let's talk about our case again, is, we said one of the interesting things is that research and the R&D is very, very core to the space that we are working in, right? And hence, kind of, even in the name that you choose, right? So in OZiva, O stands for originality. One of the first things is that we do not do Me Too products. We would not do, right? It's a reminder for us day in, day out that we need to come up with innovative solutions when it comes in the space of consumer health. And it's important for us to ensure that what Mihir and I started with this philosophy, it translates to as, to the entire team. The entire team understands the philosophy of why sometimes we take 6 to 12 months to actually come up with a product, right? Whereas it could be much faster churn out, right? Because we have to invest in R&D. I think that's the first layer of it, understanding the values and ensuring that you're translating it first to your team, because they are the ones who will drive the brand further. The second thing is the consumers, right? They need to understand is predominantly like, why I'm choosing this solution over something else, right? Say, for example, in our case, when we say plant-derived ingredients, right? So if the world is selling synthetic vitamin C, my vitamin C is coming from a plant source, right? If iron globally or in India is coming from a synthetic source, we have figured out a way to derive it from curry patta or, the curry leaves, right? I think those are the R&D and the innovations that you're doing. And it's important that the consumers understand that. And the brand, that means that the onus is on us, which is predominantly the brand, to educate, going back to the same thing in educating the consumers that this is what is unique, right? Once I've realized that the customer understands it, their LTVs, the stickiness to the brand increases. Another thing is, typical, if you look at a brand in the earlier days, it was almost like a monologue, right? Where the brand will come up with a nice fancy advertising, ad, and it'll show it on TV, right? Today, I think the important thing is you can actually get into a dialogue with your consumers, because a lot of content that you produce, they have the ability to reach out to you, they have the ability to speak to you, right? And I think important is to take care of that data, take care of those insights, and ensure that you're regularly engaging your consumers with meaningful content out there, right? Which actually goes to the brand philosophy. And I think those are the three broader areas to look at.
Vedang, since we spoke about analytics, using data and analytics for a deeper understanding of consumer trends, and hence build that culture. How would you put that? How do you do that every day?
I think the advantage is that you're online, right? If you were distributed to stores, you don't know why consumers are buying what they're buying. If something's not selling, is it not selling because of the packaging? Is it not selling because it's not even shelved correctly? Or is there a language barrier or something of that sort? So having your own website, being this D2C brand allows you to do all of this. In fact, we have real-time data running on everything. For example, one of the biggest challenges consumer brands face is inventory management. Our inventory management teams are on this like day in and day out. For example, if I put this white t-shirt to sell, from that moment onwards, the views, the clicks, the click-through rates, all of this would be tracked out, and you would project all of this. You project what the sales of this would be over the next 90 days. Doing that, you would then know what your opportunity loss would be if you're understocked, if you're overstocked, what you need to discount it at, et cetera, et cetera. So the way you flow data through this is just one example. This is like the inventory management, but the way you flow data through has to be for literally every single department. From the design team, which people thought is subjective, or how you do your marketing, black background, blue background, green background, whatever it be. I think all of this data is flowing into the concerned people. There are dedicated teams to this, and that's what we do to make sure that I think you spoke about the culture. We have this rule that you never say this will take too much time. Nobody ever speaks in subjectivity. Give exact numbers, and I think that eventually it's a pet peeve for me now. But you have to literally be very specific to what you're saying, and then why are you saying this? Well, give me a backup. You want to launch shoes tomorrow? Why should we launch shoes? Don't go by intuition only.
Shankar, the data part of it and the ultimate outcome, the culture part of it, how do you marry the two, or marry the two for tomorrow?
Holy grail question. I think if your brand can sort of start to define culture for people, you don't have to worry about much else. But I think the path to getting there, so the way I'm connecting this is the way to getting there is data. Part of the answer is data, not the entire answer. I think there is a softer aspect to this. There is a emotional aspect to this. There is a human aspect to this, that particularly for brands like in nutrition or beauty or even fashion for that matter, it's not just the sum of the parts that the customer is buying. They're buying something more than just, in the case of, for example, t-shirts, fabric and threads and print. They're buying an experience, they're buying a connect, they're buying something. I think it's sort of, one needs to create that emotional connect. And I think that's why it's important for founders to be very sort of almost emotionally invested in what they're building and passionate about what they're building. If you try to sort of just build this out as an Excel sheet 5 years out forward with all the building blocks in place, you probably have all the building blocks, but not the soul. No pun intended on the soul store, but not the soul of what the brand is about. I think that takes, I think, just investing oneself into this what one is building, no matter what it is. I think that to me is the key.
I have to interrupt. So I'm very amused at what you're saying, Shankar, because you're asking the founder to be so emotional. At the same time, he has to be rational enough to drive the business. So contradictory and yet so real.
Very, very tough conflict. This is one of the, I think you got it right there. At least in my experience, this one is one of the toughest balances to build, which is to, the point that Vedang mentioned, blue versus black. Data is telling you blue and you feel it's black. They have chosen sort of, I think, a efficient problem solving mechanism of letting data decide. That's the algorithm they are driving.
Let me just put that. I think I gave a very specific pointed answer there because of data and the culture.
Right.
The soul is not a pun. That's exactly why we started the brand. Follow your soul and do what you love. Actually, the way I would like to actually maybe I can put it is that you start your decision with the gut, right? That's why you think of doing something. Then you back it up with data. That's exactly, I think, where maybe you can marry the two, because that's what we sell. We sell fandom and we sell passion in that fandom. So you have to be, the creativity comes from the passion, then you back it up with data. I think that's what I meant.
Yeah. No, I think that balance is, I think, very, very important to have in in what we do. And sometimes one can get carried away with one's own emotions. The issue with getting emotional is you can get carried away. Right? So that's where data is the right balance to have.
Okay. So also some questions coming. So maybe short answers if you can give. Shankar, I can probably just a small question. Personalized shopping with live video connect, possible or is it feasible for D2C, Shankar?
Possible, feasible. It's here, happening. Go for it.
Okay. So let me try and get some more questions. How does direct to consumer work for tier 4 and rural markets there? Dhruv, would you like to go?
So, I think that's the beauty about direct to consumer. If the customer is sitting in a tier 3 or tier 4 city, the customer's experience doesn't have to be, jeopardized or compromised in any fashion whatsoever. They'll still be getting that same beautiful user interface of your website. They'll still get access to the same deals, whether from your website or marketplaces. They'll still receive their products on time thanks to Pickrr. They'll still get a great unboxing experience, if that's what what the brand aspires to do. So really, there's no trade-off whatsoever. I think, in fact, it might be great to target those markets because Google, Facebook, and Instagram, the media mix would be a lot more affordable. So it's actually a great thing to do.
Okay, another question, Satya Pradhan. Aarti, if you can take this one. How much does or will virtual showroom, AR/VR, immersive solutions help in online D2C retail? Would you like to take that, Aarti?
I'm just thinking of the different possible scenarios, right? I think I am really in favor of the video content, because that's very helpful. I think that's the first layer to the entire thing, and I think maybe this is far bit more into the future, right? But I might be wrong, but I think the first thing is actually the video content. I think I really wanted to add to the previous question, which is the tier 4, right? I think the problem that we all have to solve for a lot of D2C brands is, I think the experience is the same, but a lot of our own websites are today in English, right? And I remember when I said this normal one line in Hindi, and somebody from the viewers couldn't understand, but that's what the beauty of the language is, right? So today we are speaking in this room and we expect everybody to understand English, but I think beyond, if you have to look beyond tier 3, the language or the experience will become more important in your entire communication, right from the marketing to your website. Okay, and also I don't think so we've solved the problem of logistics clearly for very far-fetched places. I think having more, and that's what companies like Pickrr or Unicommerce are trying to solve for, I'm assuming, is more hub and spoke model, where you have more spokes closer to the your base area. I think that's something that still needs to be done. I know for a fact, like how Northeast for us is a very high return rate, right? And I'm assuming it would be for the other players as well. And for us, it was a major struggle to find out a warehouse that actually is located there, right? Which can actually serve the Northeast orders. I think those are the innovation, those are things that needs to be done. Yeah.
Gaurav, would you like to come in? Because Northeast and challenges of logistics has been mentioned here.
Yeah, Ashutosh. So, in generally the connectivity part of in the Northeast, and there is a very low connectivity in general there. But there is, like Aarti was absolutely spot on there. We have also seen that OZiva has had a high return rate in Northeast, and now they are shifting to a warehouse, moving closer. Earlier, the TAT of achieving like reaching the customer was 5 to 8 days. Now this has to come down between like somewhere around 2 to 4 days, and then eventually the brand will learn that what was the change in the consumer interaction. The other part I would like to mention was like this localization and reaching out to customers in their own languages. That is something that that can drive the acquisition part of it, and also make a D2C brand further closer to their consumer. because they will also see that, they understand what our needs are, and they can further drive data around, localization. Some people have different, buying trends in Northeast. Northeast, apparels generally have a higher consumption there. And then, in Chennai and all, there can be a different kind of a trend. So all these things, like, which my fellow co-panelists have discussed in the entire hour, like a lot of them will evolve in future around, localization.
Okay, look like we have time enough for just to squeeze in one more question. And this is slightly debatable, and you can go on with this debate. Kapil, maybe this one to you. What is more profitable and easy to work upon, be it on marketplace or go solo as D2C?
Yeah, I think we can spend 1 hour on this debate.
Yeah.
And even that may not be enough. I think each has its own, and since I have to keep it short, I think each has its pros and cons. What we've seen is brands are leveraging marketplaces to drive volumes and kind of get the reach, and using websites to drive experiences, communicate about the brand. I think that's a very effective combination we've seen work very well. And that, I think that's the balance. So the profitability will obviously be debatable in terms of commissions. There are certain marketplaces which charge more, certain charge less. While the commissions are higher on marketplaces, on D2C, on your own website, you have to spend a lot on acquiring the customers. So you also have to have this trade-off. But I think the combination that has worked well is have transaction, like get volumes and customer reach to marketplaces, and use your website to drive, communicate the brand messaging and the experiences.
Okay, thank you so much for all your time. Wonderful speaking to all of you. Shankar Prasad, Vedang Patel, Kapil Makhija, Aarti Gill, Dhruv Madhok, and Gaurav Mangla. Thank you for taking out the time and being with us on the Economic Times for this very engaging and very interesting conversation. I guess some of these issues we'll have to revisit because, as I like to say it, we try and get to the details, the ABCD of D2C, and we try and get to the A to Z of that. So we'll hopefully get another opportunity to talk about some of the issues soon. Thank you for being with us.
Thank you.
Thank you so much.